Hello, Maverick Traders. This is Rob Reinhold. It is January 17th. Cannot believe January is more than half over. It's been a really good trading month, but I got to say the first 2 days of this week have not been spectacular. We expected that with the U.S. holiday, but let's check in on the numbers here. We're going to take a look at the first day back from the holiday in the U.S. session. We're going to take a look at the S&P, and we can see that the S&P basically did nothing, down 0.2%. Now, this is a 2-day return. So over 2 days, that's the kind of energy the market had, negative 0.2. The VT was flat, crypto was up slightly, gold was down, oil's up. As you can see, there's no real constant theme here. We just had a day where the U.S. markets were on holiday, things were moving around a little bit, and then the U.S. markets opened up, and really nothing happened. So today was a day we kind of expected this. We talked about how trading this week really wouldn't get good until Tuesday night, and that's going to be tonight with the Bank of Japan meeting, and we think you should have been sitting on your hands anyway. As far as news goes, we did get China GDP. It was better than expected, but this is where nobody cares. Everyone knows that China was locked down last year. They don't really care what GDP came in last year. All they care about is going forward. So the market pretty much ignored that. This morning, we did get the Empire Manufacturing number out of the U.S. Now, these usually aren't taken all that seriously unless we are in the beginning months of a recession, and then they're really looked at. This is simply the New York State Manufacturing Index, and it fell sharply. It was supposed to come in at -9, and it came in at -32.9. That is just a huge miss. Remember, right now, good news is bad news is good news. This actually helped the market a little bit this morning because people think the Fed are going to be quicker to back off their interest rate hikes. We also got Canadian CPI. It was above estimates. The CAD actually weakened a tiny bit today, so not a whole lot of movement overall. If we check the charts, we can see that we are right up against very, very key levels. And we talked about this in the currency room over the weekend. We said, look, we've just had this big run, 3,800 all the way to 4,000. We're right at these very major points of a trend line. And you can see today we hit the trend line and we came down a little bit. I'm not going to get too excited over this because we do need to see a confirmation candle. If we get a big fat red candle tomorrow, then what that's telling you is that support did hold. And it is going to hold for probably the next week or two. And that the markets are probably going to be going sideways to down from that point. If tomorrow we get another doji or we get an up day, then I think you really have to take a look and say, we're just gathering momentum in a sideways move to be able to break out and move higher. We'll see what happens on equities. You can see that the world equities did much better, but same thing. We're here up against major resistance. So we came up, hit our head there. If we have a big red candle tomorrow, then you can say, okay, this is probably going to pull back down into these support areas. If we have a green candle or just sideways movement, it's telling me it's just building momentum for an eventual break higher. We'll have to see what happens on this one as well. Cryptos had a fantastic run. So great to see these running again. And we talked about we need a break. We had a huge 20% run. We need a break, and that's exactly what we're getting. And this is the kind of break you want to see. This is called a high and tight base. When you get these huge massive runs, and what happens is you get these dojis, mostly dojis. It's usually about 5 or 6 dojis, just right here in this range before you get a breakout to the upside. It's not ready to go yet, but these high and tight bases are some of my favorite trades to make. I used to never be able to make them as a younger trader because I thought, oh, it's already run 20%. I don't want to be the idiot buying it up at the high. Nope, I've seen this enough times now. These are the strongest ones. We're going to wait for a breakout above those resistance points before we do anything. Now, this is where we sat over the weekend. We liked Bitcoin long, we liked Ethereum long, and we also liked the yen long. And on the short side, we liked the CAD and the dollar on the short side. Let's take a look at the performance here over the past 48 hours. If we take a look at cryptos, you can see that Bitcoin and Ethereum did really well, and so did Ripple, so did XRP. Everything else just kind of sat there. Now, that was our score that we had that Bitcoin and Ethereum were likely to be the outperformers, and they definitely were. But look, up 2% in crypto, that's not that big of a move. That's just not a real tradable move there in cryptos. We think there's still more consolidation before they get exciting again. Moving over to foreign currencies. The yen was our highest scoring currency, and you can see it was the second worst one over this period of time. Okay, so the yen didn't really perform. We also like the dollar and the CAD short, and you can see that the dollar and CAD did both go down, but not of any significance. We expected there to be low volatility the first 2 days of this week, and that's exactly what we got. This is over 2 days. This is a bad set of numbers over 1 day. This is over the past 48 hours, and you can see there isn't a lot of energy in Forex right now. Sit on your hands, wait for the waves. Right now, the waves are receding. Things are getting less volatile. We need to wait for the waves to come back to where we start to see those movements again. Our outlook on the overall equity market is at a 1.5, a plus 1.5. If we can clear out above these resistance points, we'll go to a plus 2 and we'll go maybe even to a plus 3. But until that happens, we are just mildly bullish on basically a very mild risk-on outlook in equities. Let's take a look at the calendar here. Bank of Japan, that's tonight. There is no set time for the Bank of Japan. They announce when they announce. Over my career, I've seen it somewhere usually around 12:30 a.m. Eastern Standard Time. Could be a little bit earlier than that, could be a little bit later than that, but that's typically around the time that they announce. The yen has been very active lately, and the Bank of Japan has been making changes to their policy. I think this is a very, very dangerous and also a very exciting period of time for anyone looking to trade yen. If you're trading yen right now and you hold yen positions and you think that your stop is going to keep you safe, this thing's going to move. I think we're going to see at least 100, 200 pip move in all of the yen pairs, whatever they do. I think you want to either scale down, do something to reduce some risk, and then put that risk back on after the report is out when it's a little bit safer. I think this is a dangerous time for anyone trading yen pairs over this announcement. After that, you can see we get PPI out of the US tomorrow morning. That's going to be a big one as well. I expect probably a 50 to 70 pip move in dollar crosses off of this, maybe more if the numbers are much wider than expected. As you can see here, we think this next 24 hours is going to be the best trading period of the week. So let's jump in and break everything down. Let's take a look at the currencies one by one, and let's pair up some things and look at some entry points. I'm going to start here with Bitcoin, and you can see here that we've got a nice high base forming. This is a 4-hour chart. We got the big run, and you can see it's just basing, but look at how it's basing. It's actually getting up near the higher end of the range. It doesn't always happen, but most of the time you see this pattern, you get a nice breakout up above. The big question is, where is the entry point? This is a tough one because it's going to just keep trading higher until there is either a breakdown or a breakout. I think if you want to get in Bitcoin, I think you take a little bit of a position here and you start to scale in maybe another position at 21,500, 21,750. These are hard ones because once it pops, it's going to pop. You could have an order sitting out there. If you wanted to, you could have an order sitting out there at right above this last candle here at 21,640. You could have an order sitting there to buy it. If it gets up to that, that would be a buy stop. But other than that, I think you want to take a small position, and as it goes your way, you want to add in a little bit more, until you eventually get to the position you want. This is the best way to get into these kind of trades that creep, and then at some point, if they're going to go, they pop and they take off, and it's very difficult to get into them at that moment. It's really nice to be able to scale into these. Ethereum is also doing the same thing. And I actually like Ethereum a little better. This is a little bit steeper than what I saw on Bitcoin. This one would be, again, same thing. Either start to scale in with small position sizes as it moves higher. So here at 1580, maybe another one at 1595, another one at 1610. So again, you're just going to add a little bit. If it keeps moving higher, you keep adding in, adjusting your stop. And then if it does have the breakout, you're in it. Maybe not with a full position, but you're at least in it. That's the best way to play it. Or you have an order sitting there, maybe at 1610. 1610, a buy stop order, trying to catch that as it does get some momentum and break out. Those are the two best cryptos right now. If you take a look at Bitcoin Cash, it's weakening. So relative strength says don't trade that. You look at Litecoin, it's also doing the same thing. So those are our favorite picks still, is Bitcoin and Ethereum. Let's go into foreign currencies. I like the dollar short, period. I've liked the dollar short for a while, and I like the dollar short. And we just want to be shorting when it has these pops. So we had this leg down, it popped. Now we're starting to turn down. I still think this one likely goes and makes a new lower low here. Follows this trend line. I like dollar short. So dollar short is still on my list for a good short. I'm going to jump over here to CAD because CAD was also on my list for a short. And you can see that CAD is now just hanging out at this support level. Okay, it bounced up, came back down. There's not enough energy to break it through this, but if it does break through this, I think this thing either comes down here, maybe 1%. So I still like CAD short as well. I did like yen long, and you can see that the yen has pulled back over the last 48 hours. So the big question is this a pullback to give a little bit of relief and energy to the next run higher, or is that all the strength that the yen can muster? Right here, right now, I think you still have to look at this as a bull pullback. And bull pullbacks are good patterns to buy into. The question is where? Where do you want to get into yen? Now, this is the yen basket. This isn't the yen individually. This is the yen against the other 7 currencies equally weighted. For me, I want to see it break up above this parabolic SAR. That would be a good signal that the yen is now back to being strong. We thought it was going to be strong this week. It backed off a little bit. Above that parabolic SAR would be a nice buy point. Swiss franc, nothing going on here. Slight strength over the last couple hours, but I'm not going to stick my neck out for this. The euro is a curious one because the euro was doing nothing. News came out, boom, it tanked. We have to take a look at this and say we were at a slight positive on the euro, and now we're at a slight negative. But I still don't want to trade this. You take a look at just the range we've been in. It's really still not going anywhere. Unless you want to be a range-bound trader here and say that you're just trading ranges, I don't think you can look at any sort of trend trading on this at all. And if anything, yes, we are weak at the moment, but we do have support fairly early. Fairly close here. So for me, I'm not interested in euro. Jump over to the pound. All right, the pound is now showing us, okay, does it want to do something? Here's the problem. It's been stuck in this channel for a long time. And it's starting to show it wants to do something. But guess what? It showed that 4 hours ago. It failed. Showed that 8 hours ago. It failed. Look at how many times it failed over here. The last thing you want to do is be that sucker that buys these false breakouts. I'm going to need this pound to show me that it wants to move significantly out of this range before I get in. Because again, we've got lots of long upper shadows that appears through that level. I'm not going to be the sucker on that. There's better stuff to trade out there, frankly. Let's take a look at Aussie. Aussie was the one we liked the best after the yen. And you can see we're high basing. So right now, Aussie is just taking a break. Aussie is not tradable at the moment. Aussie breaks out and gets a little stronger. We can definitely look at the Aussie then. The Kiwi was in the middle of the pack, and it was actually the best performer over the past couple of days. Okay, we've got to move higher, but when you take a look at this in the grand scheme of everything, I mean, it's just been hanging out here for months. So I'm just not really interested in the Kiwi right now. Take a look at this on a daily chart. You can see we've just been in this range for quite a while. So Kiwi is not on my list. So really, I'm looking for the yen to strengthen up. I'm looking for the Aussie to strengthen up. They're not ready yet. And I still like dollar CAD short. And I also like Bitcoin and Ethereum. We didn't get a lot of movement, but what we did get was the euro and the yen weakened a bit. And then we saw Bitcoin, let's take that down to a +2, not quite as strong as it's in that high and tight base. And then we saw the Kiwi get a little stronger for the moment. I'm not going to chase this Kiwi because in the longer term chart, it's still just going nowhere in a range. So going into overnight, I'm looking at still Bitcoin, Ethereum long. They need to show me that they can break out. But after that, it's when you're looking at foreign currencies, really short term. Like if I had to make a trade right here, right now, I'd be looking at Kiwi. But I still like Aussie, and I'm waiting for that yen. I'm waiting for that yen to creep its way back up to +1, +2. I'm really still looking for CAD yen short. And we can even take a look at an Aussie CAD long. Let's take a look at those right now on the charts. CAD yen was my favorite Forex trade of the week. And you can see here, for the week, it's really done nothing. This is the week here. Let's go to a 4-hour chart. You can see for the week, we've basically gone nowhere. We've been between 95.35 and 95, let's call it 96. We've been in a fairly tight range here, but this is a great looking low base. These are what low bases look like. You might even be able to call this a bear rally. For me, this one still looks fantastic. Everything's working for us. EMA is coming down. Once we break this parabolic SAR, that RSI should start to weaken a little bit. I think this one is really close for an entry point. We're just right above this parabolic SAR. I'm looking at 95.56, 57 as a possible entry, and then a stop up here above 96.25. That's going to be my entry over the next 24 hours. Now, let's talk about this because this is a yen trade. If I'm looking to put this yen trade on fairly soon, I'm running right into the Bank of Japan, and I don't want to expose myself to that kind of risk because I could put my stop out there at 96.25, and that might get violated with a big move in yen, and I could have a lot of slippage. So let's kind of shy away from the yen crosses right now, and let's go cross up Aussie CAD. This one is completely eliminating the risk of the Bank of Japan, and now we're looking to just isolate some pairs that are going to be just trading based on relative strength and weakness. We have to call this a high base at this point. We run, we pull back, we run, we pull back. We just can't quite get going here. This candle was nice, but you can see there's no follow through behind it. This one looks really good. It's just a matter of when do you want to get in. If you want to take a look at a shorter time frame, I like an enter here at 93.60. 93.60, once it can show that this little pullback is over, I like a buy at 93.60 and a stop down here below 93.15. So that's a really strong trade here. Now look, this is not going to be as volatile as CAD yen. That's going to be crazy volatility. This one's going to be a slug. This one's going to move 30, 40, 50 pips. If that's more your style, then I think this is the trade you want to go with. The last one I want to take a look at is dollar yen. I do think this is going to be the biggest move over the next 24 hours. The problem is, I don't know which way. I just think when you're hunting for the volatility, what's likely to move the biggest, I think is dollar yen. And when we take a look at it on a chart, there's really, you can call this a little bear rally. So again, I still think you want to be long yen, short dollar, but I think you want to chase this one after the announcement. Let the craziness go and get into this one on a second stage entry. If you don't want to trade yen crosses, Aussie CAD looks the best here over the next little bit. As we spoke about in the currency room, we predicted that Tuesday night to Thursday is going to be the best trading zones. So let's be active. Let's look for some trades. I think there's going to be some really great opportunities with the yen tonight and also the dollar tomorrow morning. There's going to be some really nice movement. I think you do want to be looking for active trades during this period of time. And then into Friday, we probably start to peter out with our volatility again. Be very careful with the yen tonight. I really don't want any of our traders really messing around. You can take quarter positions, third positions. Okay, going into that, trying to catch something, but let's not have any full positions or double positions going into that. Let's take that risk down. Let's let that report go, and then we can jump back in after that. Yes, you may miss some pips, but a lot of times it's about surviving, not thriving in trading. So just be cautious with that yen cross. That is it. Thanks for joining me. Goodbye, everybody.